Hey everybody, welcome back to 5 Minute Financial Markets. What a big day today as the S&P 500 came back to this huge resistance line that has held us down for over a year now. All the way back to January of last year, this line has served as massive resistance every single time we've hit it. It's been 5 times now and we've bounced off every single time to the downside. Here it is, the 6th time we've hit this. Will it be a repeat? Will we bounce off and head lower? Or can we actually finally break through and make a move higher? Let's take a closer look at what actually happened today. So we started off the day with a gap lower from yesterday's close and came back to fill that gap and push even higher, and you see we closed right here at that resistance line. I'm going to go ahead and add the 200-day moving average back in. So you see we stalled at the 200-day moving average yesterday, broke through it today, and came right up to this resistance line. So what's the outlook like for next week's shortened trading week? Well, we've got indicators pointing both ways. First, let's take a look at the VIX. As we know, the VIX was elevated throughout all of 2022 and today got to its lowest level in exactly a year. So see here, January 13th. Last time we were at this level was all the way back here on January 13th. This is going to serve as a lot of support for the VIX. If we get a little bit lower, we're at 1834 right now. There's this huge support line right here at 1736. Another huge support line at 1634. VIX will not get down to these levels without having some kind of retracement back up. Elevated VIX means more volatility and downside in the market, so watch out for that. If we do have a retrace back to the upside on the VIX, that means downside for the market. So that's the thing that's looking a little bit bearish. The bullish case starts with the US dollar, which is getting weaker and weaker and weaker. A weaker US dollar means strength in assets that are priced in US dollars, such as equities, commodities, cryptos. You see that the dollar's been in this downtrend since here about early November. And actually, if we zoom back, it's been in a downtrend since all the way back in late September when it hit this peak right here on September 28th. But it's been in this really clean channel, minus a little breakout here, for the last 2 months or so. As long as the dollar stays in this downtrend, that's good news for the markets, particularly precious metals. And if you've been watching the channel for a while, you know that I am very, very bullish on precious metals, gold and silver, looking really, really strong right now. I actually think precious metals are the play of 2023. It looks like we're heading for a period of stagflation, and precious metals do exceptionally well in stagflation. So gold had big moves up yesterday and today and is back up at the highest level it's been at since all the way back in April of 2022. Now it's sitting right here at this big resistance level. The next big key resistance level is going to be right around 2000, which was that previous high back in April. And then if we get through that, the next one is all the way up here at 2080. And this yellow line here is actually a slightly downward sloping line going back to the high back in August of 2020, connects to the high in March of 2022, and will likely serve as resistance if we get back up there this year, which I think we will. I think we'll get back up there. We'll hit resistance and probably pull back a little bit, but I think we ultimately break through and reach new all-time highs on gold this year. Finally, let's take a look at the smart money, dumb money indicator. If you haven't seen this before, this compares the S&P 500 or the SPY ETF to the HYG, which is the high yield bond ETF. Generally speaking, the bond market is the smart money, the stock market is the dumb money. If there's a divergence between the stock market and the bond market, generally the bond market has it right. And we do have a slight divergence now. We've got higher highs on the bond market between mid-December and right now in mid-January. Very slightly higher highs. It's almost a double top, but slightly higher today on the HYG. Conversely, we have a lower high on the S&P. I'd like to see a little bit higher high to make it not quite so flat, make it a little more of a clear divergence before I really see this as a strongly bullish signal. But if we see upside on the HYG on Monday, I think that's a really good sign for equities and other risk-on assets like crypto. So there's a case to be made for both the bullish and bearish side. I personally think we'll see a little bit of a pullback. There's just so much resistance here and so many people have been waiting for this level to short. So I think we'll see a little bit of a pullback, and then I think we retest and do wind up breaking through. If we break through this level, I don't see any real meaningful resistance until back up at this previous high of 410, and that was back in mid-December. Personally, I'm positioned slightly to the short side, but I've got volatility on both sides, so I'm long some calls, long even more puts. So this scenario of down and then up will be perfect for me, but really I just want to see volatility one way or another. And that means a spike on this VIX that's all the way down here at 18. That's all I've got for today. Thanks for watching, and we'll see you next time.